afternoon. Ira Epstein of Linn & Associates with your metal market wrap-up for this Thursday, the 26th of August, 2021, just getting on to 5:15 p.m. Central Time. Sad day today. We've lost, to the best of my knowledge, 12 of our soldiers so far. Don't know how many civilians. The president had his news conference. I'm confused when he says we're not going to leave anyone behind. If you look out at the airport, are there not thousands of people there that want to go? I don't know if they have the right to go. And then the Taliban said that anyone that helped us, they're not going to let near the airport. And I'm seeing on other news stations letters that they're saying, we know who your brother is, blah, blah. I don't know. Again, propaganda news is propaganda news, all from all sides. You just never know, other than there's deaths. We're trying to get out. The 31st is upon us. The stock market fell. Was it off that sentiment? Was it off worries about what tomorrow the Fed chair might or might not say in his keynote speech that's at the symposium? But there is no symposium. It's a virtual symposium. It's so confusing to try to explain all this. What I can tell you is interest rates are holding here in the 135 level basically for the 10-year note. We're sitting here with energy prices still somewhat elevated. You got to be scared. You don't know what's going to spread one way or the other. The gold market did not hold the war bid, gave everything up on that. The market's back down here, and when we get into the chart in a minute, you'll understand it. I can understand the dollar getting a bid today, and it was up 25 cents because people will buy that. They often buy the bonds and notes, and yet you'll see where they're at when we get to the financial update. But in the gold market, it's been a labored move to get the market up for the week. It's up with the opening of the Friday session already, 0.6 of a percentage point, up $11 for the week. When we take a look at the daily charts, you can see how the market is stalled out first into the old resistance. Remember, this was the numbers that you got when you got the jobs data. You worked hard, you came all the way back up, and you're sort of stalling again. When you take a look at the swing line, you still have the pattern of higher lows, higher highs. The last break low, I want to be sure I'm right on this, was right here, 1778, and the current break low today was 1781.30. So you still have that pattern at work. What you also did is you got thrown back from the 100-day average, as I thought this would be strong resistance, as would the 200-day, and you're trying to figure out what next. So will that number have the same resistance next time? Not quite as much. And the reason is you've been up there, you've tried it. It's like you're chipping away at the wall. You keep hitting it long enough, the wall's going to crumble if it can get up there. That's a big if. The trend, well, the trend is up. The support you're on, the resistance is 1814.50. The momentum of the market is very overbought. Both numbers tonight are over 80. But if we go to the close of the business on Thursday, remember, tonight means you're into the Friday session. So you point out, have an overbought market, used a lot of power into a lot of resistance points, but the trend remains up, and it stays that way unless you get back through that low, that 1778 level. In the gold-silver ratio, you had a bit of a correction taking place, and today it gave up some ground as the silver market, after hitting yesterday, the 18-day average just turned itself right back. So the resistance points are set. You're not trending here. You have a higher high, lower low pattern. Momentum is still pointing up, but the bias is down. You talk a chart that's a mess, this is it. In the copper market, I still feel copper is going to be one of these better commodities over the long run. Why? Because I'm looking for peaks in the COVID. Now, as bad as the news is in the U.S., and it's terrible, beds are getting full everywhere. In the Illinois region, we're putting 200 people a day. They were just saying today into the hospitals. I don't know how many into the ICU units all over. That could be that number, but we'll find out. But when you look at it, you can see the resistance point. To clear this, you need to get over 430.45, and that would set the trend up. Now, it would also be coming off a big rally and would probably have a lot of resistance at 438. The bears are in control of the market at this point, not the bulls. They're defending the 18-day average when I think they'll have stops over that 430.50 area. In the platinum, all you did is come back to that line in the sand and you're back down here, okay? No changes. There's not suddenly the chip shortage has gone away and you're going to sell more cars and you need more platinum. That has not happened yet. Palladium, the same thing. Lower highs, lower lows. So metal markets, basically, not too exciting. When you come to the dollar index, tell me it didn't pull back from that move to the 18-day average and holding it. It's exactly what I was looking for. Now, if the Fed does something to make the dollar strong, you'll have a feel for it when it gets over the 93.14 level. And if that happens, you could be on your way again to the 93.65. If the market takes what he says is a negative and you get under 92.81.5 and close under, let's say 92.80, right in that zone, that would throw the chart bearish. I think tomorrow's an important day. It's one I'll sit back, look, and that's what I've been waiting for, to get this out of the way. I know we have a jobs data report, but when you get into these fundamentals for the dollar, the interest rates, you got to look at what the market's looking at. You know, one of the things that I know traders like to look at is these markets swing around the way we are, is where's the resistance and support market points, but intraday. One of the popular tools has always been pivot points. I don't remember them not being around. I know that one of the famous traders did them. I know that he used them when he was managing money through my accounts in my firm. Not going to mention his name. And I learned it. I learned it from the guy that created it, and we all watched and were amazed. Used to be this guy was trading these things, and I was looking at what he was doing, and he was turning down managed money. It was too big for the marketplace. I was one of maybe 4 firms he was running it through. He wrote a book. I'm not going to get into it. I'll get in trouble. Let's just use it like this. If you want to learn more about this, we've created a video series. Just go to our website at www.iraepstein.com and go to the free offerings. It's all there. I'm Ira. Talk to you later.